There's huge capital exiting commercial, exiting office, and going into multifamily by the billions. So all of this capital is pouring into the multifamily space. They could either build new assets, they could buy existing assets, recently built assets right from the developer. They could buy historical vintage assets, which is what I like to do, and do value add plays, although those typically tend to not be for the big institutional guys. All of this capital is pouring into the space. Those dollars have to go somewhere. It's going to fuel such a market strength, and it's going to really validate the market moving forward because they're going to put this capital out on the streets. They're going to buy buildings and properties that normally would say, man, how could they pay that much? They overpaid. It's too expensive. But they're going to do it because they're not going to be able to buy anything else, so they're going to have to overpay. And then they're going to increase rents. We're in an inflationary environment right now, so higher rents is a part of that, so we all have to get used to that. They want a hedge against inflation. So all this money's pouring in not just to make money, but to hedge against inflation. So they're considering it a win if they just park money and it hedges them against inflation. They don't have any return, but they're just hedged. George, I need to outperform the rate of inflation. Inflation's now around 7. We need to do better than that in our investing lives because we need to outpace inflation. So we're looking for 12, 15, 18, 22, 25% returns, which you can get in certain sectors, certain markets, and certain asset classes. Value add being one of them. Yeah, there's a lot of money pouring into multifamily, and I think it's going to be interesting to see what happens. All these dollars continue to compete and pour into this space and compete for these assets where there aren't a whole lot of assets to acquire. So it's going to force values up.